Good morning, everyone. I'm Vince Lancy. It's Wednesday. Today is Wednesday, not yesterday. Um, this is the Gold Fix Market Rundown, and we have a couple things to go over here. Okay, there's the front page. Front and center, we think that's must read if you're trying to get a handle on uh, Trump's policy pivot and the effect it would have on the dollar, the economy, and the gold. Well, that's something that you should read. All right. Today, we're going to be talking about a little tactical follow-up over the last 72 hours. We've been very closely watching the market, and we're going to discuss the 50-day moving average. Then we want to go through about four news items we think we're watching to affect the markets that could develop over the weekend, while we're celebrating the holiday. And we'll call those pre-holiday loose ends. But for now, let's start with the markets. We're going to go through them quickly because we have a lot of various items to cover. 10-year yields are up more than a little, over 1% at 429, 430. The dollar is up. The S&P 500 is up. Unchanged, let's call it. The VIX is 17, up a little bit. Gold is up $3. Following silver, which is at 36.24, up 20 cents. So a little bit of a rebalancing after yesterday's move. Copper is up 3 cents at 505. WTI is up 63. Natural gas is 329, 330. Bitcoin is up 1,700. Nice, 107 and change. Platinum and palladium are both up. Palladium is up 22. Platinum is up 45. Platinum is not done. Goldman asked the question about 2 weeks ago, is this a secular or temporary structural? Was their word, or temporary rally? And we said it's both, meaning it's structural. The market's been undervalued and gold is rising all of its cousin commodities higher as a result of that. And it's temporary, meaning the 1300 strike was a reason for the market to catapult. Now it's re-catapulting, having held an area that we talked about that was important. Okay, so those are the metals. Hating the 50-day. Last night, our message was the following. We think it's worth repeating. In the past 72 hours, gold had slipped below its 50-day moving average. That happened Friday. By Sunday night, the usual pattern followed. The bears pressed lower, hoping to trigger stop losses. They succeeded. But when prices hit their lows, someone stepped in, almost certainly China, and bought with conviction. The knife was caught. This intervention forced a turn. Within 2 trading days, the market reclaimed the 50-day line. That was significant. Shorts covered, losses were booked, and that chapter closed. Now, the 50-day moving average holds no real meaning now. The market a line without a slope, which is what it is now, is a line without a signal. Until the average slopes up or down, it will offer no edge to directional traders. If prices churn sideways in this zone, the moving average is a distraction. It may be cited, but it is no longer useful. That is the kind of false guidance that leads inexperienced traders to buy breakouts above it and sell panics below it, repeating losses in both directions. The market punishes those who mistake movement for meaning. Okay, so that little mini lecture aside, which really is to me sharing how I talk to myself about these things so I don't overtrade, completely ignoring my own advice, know that we are long silver and doubled our position Friday in the hopes that macro discretionary would come in the new quarter. Our time frame for this to start happening is Monday at the latest. So there you have it. Is macro discretionary coming in and buying? Yeah, they started with gold, the bastards. But we think, look, gold is being bought for domestic debt, tariff related reasons. And silver is being sold by the gold buyers again. But platinum is now its own market and just rallying. And so if you're getting your ass handed to you in platinum, you're thinking about maybe not being short silver going forward. So that's it. Silver is taking turns rallying with gold, and platinum is just saying, look at me. I'm the one to be watching now. So that's what we think is going on. The news items that we think are potentially driving, and since it'll be a long weekend, we may not be on tomorrow, and we certainly won't be on Friday, are the following. President Trump reaffirmed Tuesday that the U.S. will not extend its tariff pause beyond July 9. Only a deal with the UK and a temporary truce with China have been secured to date. Markets continue to price in optimism that agreements will be reached or talks extended before the deadline. If not, reciprocal tariffs of 20 to 50% could be reinstated next week. That's probably the big fireworks driver for precious metals and other markets coming up. Next item, the one big beautiful bill. The bill that broke up the Musk-Trump bromance. The Republican-backed bill budget proposal passed the Senate on Tuesday by a single vote, with Vice President J.D. Vance breaking a 50-50 tie. 3 Republican senators opposed the bill over concerns about rising deficits and Medicaid cuts. They'll probably be the ones that Musk backs. Long-term U.S. Treasury yields have risen as investors demand higher compensation for the increased fiscal risk. The bill now returns to the House of Representatives for another vote. Trump aims to sign the budget by Friday. So there you have it. It's going to happen by Friday, or it's going to happen sometime at a later date. But Friday's probably a good time to do it if he can get it done. It looks like he's going to. Powell spoke in Sintra, Portugal, and he pushed back against against people asking him why he's not cutting. So speaking at the ECB's annual forum, Fed Chair Jerome Powell stated that the Federal Reserve went on hold in response to the inflationary effects of Trump's policy. Edit, bullshit, see the note for more. We're not going to go through the note right now. All inflation forecasts for the United States went up materially as a consequence of the tariffs, Powell said. The central bank has faced mounting pressure from Trump to cut rates, but Powell implied that absent trade policy disruptions, monetary easing would likely have already occurred. We'll just bite our tongue for now. U.S. jobs data is tomorrow, right? So a light macroeconomic calendar lies ahead today, with focus turning to Thursday's non-farm payrolls report. Investors are largely sidelined until clearer labor signals emerge. The melt-up continues as the U.S. dollar melts down. Now, I wrote all those, but they're very structured, so let me just throw my comment in here. Investors are buying. It's kind of a melt-up. Note that I said with focus turning, I'm sorry, the payroll, look, Powell, the reason payrolls matter probably more than, say, the last year is because in Powell's mind, the inflation is on its way down and will get a bump during maybe the next 3 months. As long as oil stays here, because of tariffs probably on the back end starting to do a little bit of inflationary work. Not much, though, considering that Japan is absorbing like price cuts of 12% to offset the tariffs on autos. Anyway, the point is Powell will avoid cutting at all costs unless the unemployment rate rises or the employment rate drops. So if people start getting fired, then he's going to be more likely to shift from continuing to pursue his inflation goal of 2%, which he created the problem, right? Versus making people get jobs again. So he's very employment oriented right now. He doesn't care about GDP. He believes inflation is going to pop up a little bit. So there are two schools of thought right now. We are in neither camp. We really don't know. One is, and this is like the Tom Luongo point of view, and I see the logic. He spoke with Chris Marcus about this yesterday. That is, the yield curve is kind of a smile right now. So you'll hear people say the belly of the yield curve is steep, and that's because there are people betting on a rate cut, right? And they're betting on a rate cut by they're betting on the tariffs to fail, and so they're buying twos and selling 30s, or some people are buying twos and other people are selling 30s. That's what the market is doing overall, and that's something that happened under Yellen as well. And they do that expecting the Fed to cut. So it's possible that Powell could cut 50 basis points, staying with that line of thought going into July or September, like, big one and done. The other point of view is Powell's worried about his legacy and he's almost on his way out. And the next guy could be Arthur Burns and cut rates too much. I don't know. But I know that he's more likely to stay the course and withstand the pressure because he is influenced by politics. That's where I come down on it, for what it's worth. Coming soon, Turks hold $331 billion in gold despite crackdowns under their pillow, in their mattress. You can't look at the Turkish lira and say, give me your gold back if you're the government. Anyway, that's how it works. We're also going to do a piece. There's been a nice Q&A from a bank on stablecoins, and we're going to break that down because it really is a deep dive into stablecoins, but we're going to do it from a gold point of view, gold tokenization. So unlocking gold's potential with stablecoins and much more. And then finally, an unemployment number preview later on in the day. All right, that's it. I'm Vince. Have a great day.